I'm Dr. Benjamin F. Chavis Jr., and this is how to get your money right. We're honored to have the national president and CEO of the National Urban League, the Honorable Marc Morial, and we have Ewunike Brady, distinguished representative of Wells Fargo Bank, particularly with lending in the African-American community, home ownership in the African-American community. This program is how to get your money right. So Marc, I know that you've been working with Wells Fargo. Tell us about the focus of the Urban League's work with Wells Fargo to help engender economic development in underserved communities, particularly African-American communities.
Hey, well, thank you for having me today, and great to be with you. So just as a preliminary, foundationally, we believe at the National Urban League that the right to safe, decent, affordable, energy-efficient housing is exactly that, a basic right that people have as Americans. To pursue that and furtherance of that, we've done a number of things in partnership with Wells Fargo, but the one I'd point out is the Urban Appraisers Initiative, because we identified, as did many, that the appraisal system in America is loaded with bias.
Yes.
And an appraisal is part of every home purchase, part of every home refinancing, and the value of the home, which is determined by the appraisal, is determinative of how much money you can borrow. And so we've worked hard because when you look at that industry, it is dominated by white men and white men only. And our work to make it more diverse is our Urban Appraisers, if you will, initiative with Wells Fargo, which is about preparing, training, and introducing a new generation of people to become real estate appraisers. It's a good gig. It's a good business. Many people do it on a part-time basis, but it is steady work because wherever there's a mortgage, there's an appraisal.
Very good. Ewunike, tell us, first of all, congratulations on your leadership title at Wells Fargo on home ownership. Tell us about what you do and how it intersects with what Marc just said about urban appraisal program.
Yeah, absolutely. Thank you for having me here today, and it's always wonderful to be with you, Marc. The work I lead is really to support and create opportunities for building racial equity in our housing system. It is a commitment that we have at Wells Fargo, and having the opportunity to work with the National Urban League. And through this process, we're creating opportunities to grow the next generation that's going to be leaders in our housing industry. And this is going to stem from appraisers all the way through to our home mortgage consultants, loan officers, originators, every step of the way in this process to help our communities be able to invest in the communities that they grew up in and stay and have ownership in those spaces.
So Marc, this is a very unique initiative. What has been the response? Let me ask you, is this intergenerational or is it focused on one?
This is intergenerational. It's all genders. It's got nice traction with younger people who are looking for opportunities. This work can be done even if you may have a full-time job. Some appraisers work part-time. They work in the evenings. They work on weekends. Some appraisers work full-time. So it creates, if you will, an opportunity for some flexibility. We're working through a handful of our affiliates. This initiative now is focused on specific markets. And in doing so, we like to right size and right, if you will, execute a program before we expand it broadly. And as you've shared, while the goal is to diversify the appraisal ranks, appraisers in many instances will sometimes transition to other roles in the real estate industry. Real estate agents, real estate brokers, mortgage brokers, home loan counselors within the bank. So this is really a push to diversify not only the appraisal industry, but to diversify banking and home finance much more broadly. The way I like to think about it is diverse communities have been underserved and emerging. Sometimes when you hear business speak, they talk about emerging markets abroad, emerging markets in other parts of the world. We have an emerging market right here in the United States.
Sister Brady, tell us about what you see has been the response to the program thus far.
The program is in really a developmental and our initial stages, and the community is eager to see the ways that we can impart change and create new opportunities for diverse appraisers to come into this space. And as we look at home ownership, there's a lot of spaces that we can support growing and expanding, and really starting with the appraisers is where this relationship is going to have the most impact.
The pathway to wealth generation in African American and other underserved communities. Do you see this initiative helping keep that pathway open or even widening?
I definitely feel it'll open it. We're on the precipice of African Americans, contributing $2 trillion in spending power in our nation. And so,
say that again, that's a big number.
Yes.
With a T.
With a T, that we are on the verge of African Americans owning $2 trillion in spending power in our nation. That's the GDP of Italy right here in the United States. And so within our African American community, there's a lot of opportunity to get into home ownership and start to create that generational wealth. And so when we're standing up opportunities and initiatives where we can have diverse appraisers, we can have more diversity and loan officers, we're encouraging folks to get education through housing counseling agencies. We're equipping our communities with what they need to start that path and elevate generational wealth through their families.
So Marc, $2 trillion? That's a lot of spending, brother.
So think about it. 2 trillion, as she said, is the GDP of Italy. If you take the spending power of Blacks, Latinos, and Asians in this country, we'd be the third or fourth largest nation in the world. 2 trillion. And that number was probably about 700 million 10 years ago. So what's important to recognize is not only how impressive this number is, which shows how much spending power Black Americans have, but the pace of growth, the method. It is growing faster than the growth of any other community with the exception of Latinos. And that means that those companies that are smart and wise and thinking ahead will look at the Black community as a great place to do business, a great place to invest, a great place to indeed lift up. Because the way I like to think about it is diverse communities have been underserved and emerging. Sometimes when you hear business speak, they talk about emerging markets abroad, emerging markets in other parts of the world. We have an emerging market right here in the United States. It's in our urban communities, Washington, D.C., Detroit, Baltimore, New Orleans, Atlanta. It's an opportunity for growth.
Very good. Ewunike, Wells Fargo is kind of out ahead of other banks. And I know you've worked in different settings in the financial services community. What's your evaluation of Wells' commitment to economic empowerment for African Americans and other communities of color?
Wells is, and I'm proud of the work that we're doing at Wells. Wells is deeply committed to the advancements, particularly advancement of Black home ownership. And it's one that has been, since my time being with the company, which is almost 20 years, as well as...
20 years?
20 years.
You don't look like you're 20.
Much appreciated. But it's one that's forward-facing. I'm excited about the things that we're yet to do, that we're going to continue to commit to. This is something that's ingrained in our culture at Wells Fargo. We believe in diversity. We believe in what it's able to do and how our communities are going to be able to thrive when we're able to put a better lens and create more racial equality and equity in homeownership.
So, Marc and Ewunike, how do we use a lot of millennials and Generation Z? They get their information on social media and other forms of media, but disproportionately, studies have shown that we over-index on Twitter, we over-index on Instagram, we over-index on Facebook, etc. Even TikTok, we over-index. I'm concerned about the accurateness, how accurate is the information, and what can we do from the Urban League perspective or from Wells Fargo perspective to make sure that people get the right information on time so they can respond to the opportunities at hand.
We have to remind people, caveat emptor, the buyer should beware. In other words, any information that's in the public domain, whether it's newspapers, advertising, or social media, you should look at it with discernment. Don't take it for face value. It could be inaccurate. It could be untrue. It may not necessarily be for you. So what do? Look for secondary sources. If you're going to trust it, verify and corroborate it with secondary sources. And then when it comes to home ownership, when it comes to wealth building, look to trusted sources like the National Urban League, like Urban League affiliates for guidance and thought about how we do this. We've got to recognize also that you've got to be in the social media world to play ball today, to connect with people today. But we've also got to encourage people to not just buy lock, stock, and barrel what they see or what they hear on social media, because there's an active campaign, as you know,
yes,
of disinformation.
Yes.
Not misinformation. Which means the intentionality is to trick you and bamboozle you and get you looking at inaccurate information. So I want to encourage people to be focused on trust and verification.
There's a tremendous opportunity for collaboration across the housing industry, and that's the way that we're going to impart change, disrupt status quo of how things have been going, and we need partners like the Urban League to do just that, and we have to do this together. It's going to be much bigger than just Wells doing it on their own or the Urban League doing it on their own. It's when we come together that we're really going to make the most sense.
Tell me how you found, I know Marc is sitting right next to you, but how have you found the relationship working with a prestigious organization like the National Urban League? Your colleagues at Wells Fargo, how do they see the Urban League?
It's been a great relationship, and it's one that's been flourishing and growing. And to Marc's point, even when you're speaking about the social media, it's having a conduit to get education. And that's one of the great things about working with the National Urban League is that they have trusted advisors that when we have borrowers or folks that need to find more information, that they can go to resources in their community, such as the Urban League, and have that relationship. And so there's a tremendous opportunity for collaboration across the housing industry. And that's the way that we're going to impart change, disrupt status quo of how things have been going. And we need partners like the Urban League to do just that. And we have to do this together. It's going to be much bigger than just Wells doing it on their own or the Urban League doing it on their own. It's when we come together that we're really going to make the most sense.
So I should say, Ben, that key
Yes.
to our relationship is Christy Furco, who's a senior executive at Wells, a member of the National Urban League Board, one of the highest ranking African Americans and the highest ranking African American women in the banking and financial services industry in America today. She's been key to building, if you will, the kind of energy around this Urban Appraisers Initiative. So this does not happen without the right people who make the right commitment and who build the right trust. And Christy's been that kind of person.
Maybe the other banks could learn something from the Wells Fargo experience, but it makes good business sense. Lastly, I'm gonna ask both of you, what do you say to people who say, how do I get my money right?
I would say you need to have a plan and you need to know where you're trying to go. What's your why, right? And then build into that. And you want to plant seeds for your future, and you want to give yourself trusted advisors around you to help support where you're trying to go. And it's important because that's going to open the door. It's going to give you that runway to do all the other things that you want to do in life, whether it's from home ownership to going to school to starting small businesses. You really need to have a plan.
And I endorse, affirm, and amen. But would add one other thing. there is a difference, and you must know it, between an appreciating asset and a depreciating asset. Learn the distinction.
Well, give some examples, Mark. You'd be surprised. Those are big words. People may not know what an
So a
appreciating asset is.
depreciating asset is the finest automobile, a BMW, a Mercedes, a fancy Caddy or a fancy Lincoln or a fancy Chevy. It's a depreciating asset. It will never be worth as much a year from now as it is today. An appreciating asset is most real estate. Most real estate will be worth more tomorrow, next year, and 10 years from now than it is worth today. That's probably the classic example. Most clothing, most items are depreciating assets, meaning they'll never be worth what you pay for them when you take them home and bring them home. So those are other examples. Other investments can be appreciating and depreciating. Some investments in the stock market could appreciate and depreciate. Know the difference. And in our life, we're going to invest in some depreciating assets because we need things like automobiles. We do need things like clothing. But remember the distinction so that, as you've shared, have a plan, P-L-A-N, and stick to it.
Very good. Sister Brady and President Morial, thank you so much for joining How to Get Your Money Right.
Thanks, Ben.
Thank you.
Whether you make $50,000 a year or whether you make $1 million a year, you still have to understand what the basics are. How much are you bringing in? How much are you spending? And then what are you going to do with the rest that's remaining, if any?
We want to welcome to How to Get Your Money Right, Kyle Stearns, the founder and CEO of Stearns Financial Group. Welcome.
Thank you, Dr. Chavis. Thank you for having me, sir.
So you have a lived experience in finances from your family, education,
Yes, sir.
and now as an entrepreneur yourself.
That is correct.
Tell me, as the CEO of your own financial services group, what do you see in the market? Is it being more diverse or less diverse?
Good question, Dr. Chavis. You know, there's only about 1,300 CPAs of color in the United States. There's about 87,000, give or take, financial services representatives. That number has been somewhat stagnant over the years. Haven't seen a lot of growth. The future is promising because every day, 10,000 adults are turning the age of 65. And because of that, there's a huge need in the financial marketplace for people of all colors to participate in, but especially in the Black community.
And give that statistic again. Every day.
Every day, we have 10,000 people turning the age of 65, and that's because of the baby boomers. This is the population that were brought on board after World War II. And of course, every major trend that's been set has been because of the baby boomers. Now the baby boomers are turning the age of 65 every day at the rate of 10,000. And that's creating a lot of opportunity for people to learn about finances, also an opportunity to teach about finances.
What are the top two things you've learned out of your career in financial services?
Number one is people need to understand where they are. You know, in order to have financial freedom, it can look differently depending on who you're speaking with, but some things are just fundamental. For example, understanding what your income is, what your expenses are, and the habits of your home, all right? Regardless and independent of income, those three things are just basic. Whether you make $50,000 a year or whether you make $1 million a year, you still have to understand what the basics are. How much are you bringing in? How much are you spending? And then what are you going to do with the rest that's remaining, if any? So that's most important. The second thing is not trying to keep up with the Joneses. You know, in the world of social media now, everyone is looking at Facebook and Instagram and looking at everyone else's lifestyle, and they're trying to emulate it in some type of way, not really knowing that that person may have taken that picture in a hotel lobby It wasn't necessarily their home. So we get caught up in trying to keep up with each other instead of buckling down, understanding what your finances are, and then try to make wise decisions on how you can improve upon that.
What age range would you recommend that students and young people start learning the importance of financial literacy?
You know, I have two sons, two grown sons. My oldest son, who's now in his third year of medical school at Howard University, he's 28. My youngest son just graduated from Loyola. And I remember having to sit them down and talk to them about basic finances. And someone coming from the world of finances, I never thought of how important it was. I could have done this when they were 3. I was so busy trying to make sure that they understood how to read and write that I didn't teach them the basics of economics. So to answer your question, sir, the earlier, the better.
What would be your advice on investments that are sustainable, to use your term?
Yes, sir. A lot of folks don't realize the power of life insurance and how it can be used as an investment tool. You know, in life insurance, there's 3 things that really determine whether you can qualify. 1 is your age, number 2 is your health, and number 3 is your lifestyle. So the younger you are in any type of investment, the thing that you have to take advantage of is time. So you can put a little money aside, but because you have the luxury of time, you can allow that money to stack up. But when you're in your 50s and you haven't set any money aside for retirement, you need to be a lot more aggressive because you don't have the time on your side. So really depending on where you are dictates how aggressive you need to be in your investment strategies moving forward.
One of the top questions, Kyle, is the differences between a trust, a will. Majority of our families member pass on, there's no will. Even sometimes when there's a will, if it's heir property,
Yes.
it still goes to probate.
Yes, sir.
And what is the percentage that probate takes?
It can be as much as 30%, Dr. Chambers.
30% off the top.
Off the top. Before any of the parties get any disbursements of funds, 30% is gone.
Having a trust can avoid that.
Yes, sir.
Man, that's some great piece of information. You need to start Stern's Trust Company.
Yeah, wills and trusts are something that we ask all of our clients to get. As a matter of fact, we provide it for free with one of our carriers. We have a relationship. If they have that particular product, a free will and trust is provided to the client. It's valued at $750. It has all the information needed to protect themselves and their family and the properties or the assets in question. And it continues to grow with them over life because everyone's life needs change. So if there's a change that needs to occur, it's taken care of.
You talked a lot about settings.
Yes.
The family setting. Can you just end on the importance of not just one person in the family, but everybody in the family getting financial literacy?
One of the products that we definitely recommend, and we recommend different products at different stages of people's lives, right? But for someone who just entered the home ownership phase, one of the products we like to recommend is a mortgage protection policy. What does that mean? This is a policy that basically ensures that if something happens to you as the primary breadwinner, if you were no longer here, your family would not have to move out of that home. The mortgage protection policy can do one of 2 things. It can pay off the entire mortgage, leaving a 0 balance for your family, or it can make mortgage payments on your behalf when the primary breadwinner is no longer available. That simple product can ensure that a family's legacy is left intact.
Most companies that have that make it part of the mortgage payment.
Right, that's private mortgage insurance or PMI. This here is actually mortgage protection insurance. This is totally separate from the mortgage company, totally separate from the transaction. This is a policy that the homeowner owns and controls themselves. So for example.
So then the payoff goes to the homeowner?
Goes to the beneficiary.
The beneficiary.
Yes, sir.
Okay, that's different.
Yes, sir.
Because the payoff goes to the mortgage company.
Goes to the mortgage company. So the laws changed to where now the homeowner can have a policy that they own and control themselves, and they can name who the beneficiary is. So in that same example, if the primary breadwinner dies, they purchase a $300,000 policy, the spouse or whomever the beneficiary is will get a check for $300,000. So then they could write the check to the mortgage company for the $200,000 versus waiting on the mortgage company to send them a check for $100,000.
And what's the name of that policy?
A mortgage protection policy.
Kyle Stearns, thank you for joining
Yes, sir.
How to Get Your Money Right.